Right, so this presentation is based around a few of the key events that we actually saw in 2018, but predominantly what we should actually expect from 2019, because there are going to be a lot of huge key events that really do reshape the way that we view this space. And we have been living in a bit of a fantasy world, and of course in December that did drop off massively. People do need to realize that this is a space that does need to also comply to laws and regulations. And 2019, a lot of those laws, a lot of those regulations will be moved into place. Now, with this presentation, this is just, of course, thoughts of my own and research that we have also done as a company. So please do not take it as financial advice. It's more of a thought-provoking mechanism so that you can actually go away, do your own research, and of course, validate what I'm actually saying here. So a few of the milestone moments that we saw from 2018, we saw that regulators actually started to properly speak out. Most recently at an event called Consensus Invest, we saw Jay Clayton, who's the CEO of SEC. He was talking a lot about ICOs and more or less taking quite a few jabs at the ICO market. And more importantly, on how we can actually move forward with the regulation stance, because we are going to need companies like ourselves to actually work alongside regulators to build framework so that companies can also thrive. Because companies like us, we need regulation in place because it does allow for a lot of other things. VC investment up 280% from last year. In 2017, $1 billion was invested into startup companies to actually help them thrive and help them grow. So far in 2018, we've seen 3.8 billion invested. This is a very important metric. Reasons why is because VCs actually do help in terms of how to structure your company and how to excel the company, because companies also had the exact same scaling issue that a lot of cryptocurrencies did. Back in December, when the market hit its peak and the interest was also at its peak, a lot of companies couldn't sustain the weight that was being placed on them. So they had to basically throttle how many people they're allowing into the companies. ETFs, exchange traded funds, has been talked about for years now. A lot of them have been declined time and time again. Most recent ones, ProShares and Granite Shares, have both been declined. Solidex, VanEck, both pushed back twice. Now, we won't see an ETF get approved. The reasons why is the regulators are very clear on their stance. Market manipulation needs to be solved before an ETF gets approved. Now, these providers, these people that are actually creating these ETFs, they are sorting out and fixing the issues that they have internally, but they are not fixing the issue that we have as a market. Only way when we have an ETF approved, only way that will actually happen is once the market has regulation and we do clean up the space as a whole. And that's when you'll start to see ETFs getting approved. So all of these ones that are getting pushed back and getting declined, we'll continue to see that until the space is cleaned out itself. The backed exchange, to be honest with you, I'm actually pretty excited about the backed exchange. The reasons why, it will actually just be nice to have an exchange that works properly. If you've used any of the other exchanges that are currently in the crypto space, first of all, they are very buggy. And if you are trading quite a lot of money, those bugs could result in a loss of a lot of money, whether you're putting buy orders or limit orders. Now, the backed exchange is actually is created by a company called ICE. ICE also created the New York Stock Exchange. So they have history there. It is a juggernaut of a company, and it's finally refreshing to see companies like that coming in and setting up infrastructure within this space. Even though the backed exchange has been pushed back a couple times, and the date that they've now pushed it back to is, I believe, the 24th of Jan. And I actually believe that it will get pushed back again because, again, they need regulation in place, the space cleaned out before they do properly solidify themselves. Now, let's just jump directly into the actual technicals of cryptocurrencies. Now, we've been arguing for a few years now on what the best way is of scaling, so allowing more transactions to happen on top of a chain. With Bitcoin, there's this argument that is stemmed from the core development team that they believe that a 1 megabyte block size is the right way to go. And they are touting that they want to be the gold of the crypto space. Now, I believe that is a completely silly ideology that just won't work. And especially if you want to be a gold of this space, a 1 megabyte block size is not helping that cause whatsoever. Let's look into what 1 megabyte actually means. This is why BCH was originally created, is because we wanted to make sure that we can scale efficiently and effectively on chain. Now, what 1 megabyte does, the way the blockchain actually works, think of each block has a data limit of 1 megabyte, believed to be every single transaction is an amount of data. So you can only fit a certain amount of data, of course, in a 1 megabyte block size. Now, there's huge limitations on that, because if I'm a corporation and of course I want to process as many transactions as I possibly can, and we saw this market gain a huge buzz in December, so transaction volumes peaked at that particular point. Because we kept to a 1 megabyte block size, we kept on hitting the ceiling. That is why there was a huge backlog of transactions. Users now had to compete to get their transactions processed by a miner. So as a result, that actually caused high transaction fees. As a company, we experienced transaction fees anywhere between $30 to $40. And months went by where we were spending thousands in transactions. No company on this planet wants to spend thousands just to process transactions. December was physical proof that that 1 megabyte ideology just does not work. And their whole reasoning on why they didn't want to upgrade the data limit was because they believed it was unsafe. BCH and also BSV now, which is Bitcoin Satoshi's vision, has completely proven them wrong, because they've gone to 8 megabyte blocks, 32 megabyte blocks, and they are not stopping there. So with this being said, what I was touching on with companies actually come into this space, no company would want to set infrastructure. Let's just say, for example, on Facebook, every single transaction, every single comment, every single like will be considered to be a transaction. Facebook could effectively be handling 2 million transactions per second on their private servers. Bitcoin currently can only handle 7 transactions per second. So if I'm a company like Facebook, why would I even bother giving you 1% of my traffic when I know all that's going to happen is going to completely jar the network? Not just that, you're going to charge me extortionate fees to operate on the network. That is why merchant adoption has not happened yet. As physical proof, here is a chart of transaction velocity. So it shows perfectly back in December when the network actually hit its peak. So it hit the ceiling of that 1 megabyte limit. We also had a huge backlog of transactions. And because fees spiked so aggressively, it was no longer incentivizing users to be a part of the network. That's why we saw transaction velocity drop dramatically. Now, bear in mind, transaction velocity is what actually gives these cryptocurrencies value. A cryptocurrency can have the most amazing utilities on the planet, but if it doesn't have people using it, it doesn't have value. So limiting transaction velocity with a block size limit just makes absolutely no sense. And if you can't have people using the network, how can you say that you're going to be the gold of the crypto space? Now, how does this actually directly impact miners? Bear in mind that miners have a very important role within this space. They are the people that secure these networks, and they are also the people that process these transactions. They initially put their hands in their pockets first to make sure that they are buying the best equipment possible, and also creating the best software possible. They want to be as efficient as they possibly can. Now, mining is just like any other company. No matter what area you look in, competition is always a thing. Competition is a thing within companies. We do it in our own personal circles. In every single fraction of life, competition is always there. It's exactly the same with miners. So miners need to be always incentivized to make sure that they're maintaining the network. Now, there's an event. The event is called the halvening, and it happens every 210,000 blocks. And what that means is the way that the miners are actually incentivized to maintain these networks and process transactions and make sure that they're continually growing is they get a block reward. So every single block that is created, bear in mind that there is a block every single 10 minutes thereabout, they receive an incentive of 12.5 BTC. And they also receive all the fees attached internally within those blocks. So every fee that we pay goes to the miners. Now, in about a year and a half, the halvening is going to force these miners to receive half the BTC of what they're currently getting. So in a year and a half, if the price of Bitcoin stays exactly where it is, and we're already seeing a lot of these miners go out of business because of the squeeze that is happening, because of course prices are slumping. As soon as we have the halvening event take place, the network will start to degrade. The only way that, of course, you stop this from happening is transaction velocity needs to be of such a level to the point where it makes up for the BTC that is missing. So having a block size limit is only giving these miners one option on the BTC network, and that one option is the block reward. Because if they are not getting the fees attached to all transactions across the board, they are completely reliant on Bitcoin's price. And that is why between 600,000 and 800,000 Bitcoin miners have shut down since mid-November. And since we've made this presentation, which bear in mind was probably only about a week ago, that figure has greatly increased. And we're seeing miners left, right, and center go out of business, which has a negative and a positive, because of course out of this you're going to have the miners that are solid, so the miners that can weather the storm. They can continue to invest into R&D because they need to make sure that their mining equipment is as efficient as possible. Their electricity costs are as low as possible. Not just that, their software is also most efficient as possible. So it is forcing these miners out of the game. So it is completely shutting off the second option of them being able to actually get the fees attached to these transactions. Now, with the Bitcoin difficulty adjustment, how that actually happens is, like I said, we have a block around about every single 10 minutes. And the way that these miners work out these blocks, just think of them as big, long maths equations. And of course, our processing power is there to work out those mathematical equations. Now, what happens if I double my processing power? What the Bitcoin network does, because if I double my processing power, that means I can now effectively mine a block in 5 minutes as opposed to 10 minutes. Now, what the Bitcoin network does, it adjusts its difficulty. So more hashing power that's on the network, guess what? That mathematical equation now just gets longer. Vice versa. If the hashing power drops on the network, that mathematical equation just reduces. Now, November the 16th, 2018, difficulty adjustment has gone down 7.39%. December the 3rd, again, down 15%. And the next current difficulty change is now sitting at around about 10% down. Within finance, if you have 2 negative quarters, guess what? You're in a recession. These miners are feeling that way more than definitely, because they are definitely feeling the squeeze. We're seeing a lot of them go out of business. And of course, these are the people that are adding processing power and security to the network. So it really is in a situation of survival of the fittest. And the 1 megabyte block size limit is not helping them whatsoever. And here's a perfect representation of that. Of course, we can see the line in the yellow is the price point of Bitcoin, in which these miners are just solely reliant on the BTC network. And the orange line is the hashing power attached. So the hashing power since the past month has greatly dropped off. And of course, that has a direct correlation with the price also slumping. So the price has gone below where these miners are at their operating price, their operating cost to produce these Bitcoins. So now a lot of them are basically thrown in the towel and saying that they can no longer support the network because they just can't afford to. And this is degrading the network because, again, hashing power is massively important. More importantly, how cryptocurrency is currently being manipulated. Now, this space was originally created to replace the financial system, to go against the financial system. It doesn't mean to break laws, but we are here to make sure that transaction is quite simply a peer-to-peer network. So we want to handle the transaction basis. You need to understand the gravity of what that actually is, because if we are going against the financial system, bear in mind that the people that are in control of the financial system, the top 1%, the deep state, the cabal groups, the way finance works is you have a central bank. The central bank is a for-profit company. An individual owns the right and power of the creation of money. Now, if you own that power, and if you have that power to create new money, guess what? You don't need money. Money is not a thing for these people. So what's the incentive of them actually doing it? It's power and control. It's the things that it allows them to actually do. And that is what is in a lot of our other presentations, which is the global pyramid of power. And of course, at the top of the global pyramid of power, you have the divine families, and then all the mechanisms that they actually use to control the population. Below that, you have finance, of course, to basically put a lot of people in a suppressed state with finance. Finance is pretty much a game where a lot of people strive for it, are always striving for it. Very few manage to obtain the point where they can actually buy their freedom back, because that is all that money does. It obtains you the ability to be free. The more money you have, the more time that you have. They use mechanisms like finance, they use mechanisms like media to control the population. So if we are taking that power away from them, it is completely irrational to believe that they are just going to let this space grow and prosper. Of course, we are going to hit roadblocks. Of course, they are going to oppose this space. That is why Bitcoin is massively important, that Bitcoin complies to every single law out there. It cannot break any form of laws, because guess what? They can just ban it. Even though everyone has this anarchistic view that we are anti-government, we are anti-state, we are anti-laws, we are anti-regulation, we need to work with these parties and make sure that there are no reasons given on why they can shut Bitcoin down or why they can ban Bitcoin in current states. And if some do it, it will have a knock-on effect. So Bitcoin has to make sure that it complies with every single law out there. Now, one way they have been manipulating this space, and they have been doing it without people actually realizing, is divide and conquer. Divide and conquer is an art form that they have been using throughout wars. We do it in our social structures. We do it throughout companies and business in general. Now, this is what Bitcoin looked like in the early days. Now, for a merchant to now pick to build on a cryptocurrency at this particular point it was exceptionally easy because, of course, you have one currency. As a merchant, I know it's stable and secure back then because the protocols were different. This is now what the cryptocurrency space looks like. And this is how they have manipulated this space. This chart should actually just cover the entire page because they have compartmentalized this space to such a degree. If I'm a merchant on the outside looking in, and bear in mind, personally, I've worked in this space for a long time now, so I can tell the difference between what a shitcoin is and what a good coin is. But if I'm a merchant from the outside looking in, wanting to now build infrastructure on top of one of these cryptocurrencies, what the hell do I choose? Bitcoin itself can only handle 7 transactions per second. Guess what? You cannot support my weight. So there, it makes it very distorted on what options you should actually pick as a company to build on top. And guess what? The majority of companies are just saying, you know what? We're going to sit back at the moment, just wait for the market to clear out, wait for regulation to come in, and then we will know exactly what we're doing and we'll build on top of these networks. Because these companies have to invest a lot of money into research and development to actually build on top of a network. And if they are investing such a quantity of money, they want to make sure that the foundations they're building on are stable and secure and that they are not going to move. Regulation. The funny thing is, I actually believe regulation is going to be the thing that saves this space. Funny enough, because what regulation is going to be, it's going to completely decimate the ICO market. Because what a lot of these developers are not aware of is the fact that if you're creating an ICO, guess what? You're more than likely creating a security. If you are creating a security, you need to have a license. And if you're an exchange trading a security token, you also need a license. We've seen this before, and a lot of people are gonna have their lights turned on and they're gonna have a lot of questions to answer. And some of them, it will even go as far as some people will be thrown in prison because you cannot just create a project, raise 100 million for it. The project doesn't go according to plan or there's technical difficulties, and then you just bugger off with all the money and go and create another project. In this space, we wanted the people at the top to be able to answer for their actions. Now, we cannot have a complete shift and say that we are now in these positions of influence or position of power, so to speak. And now you are doing the exact same thing that we were against to start off with. And you don't even know that you're doing it. And the ICO market is going to be the thing that does get hit first. And just like I was saying at the beginning, it's up to companies like ourselves and companies working in this space in general to actually work with these regulators to set real framework that will actually allow everyone to prosper. And it will give users the confidence to come to this space. Not just that, companies also the confidence to now come to this space, because merchants are the most important thing. Merchants are what leads to mass adoption. Just to break down the difference between what a security token is and what a utility token is, a security token, it generates its value from an external asset. So if I'm sending Ethereum into an ICO, if I'm sending my Ethereum in to buy another token, and I'm buying that token in anticipation to receive more value, guess what? It's a security. 99.99% of the ICOs out there are security tokens. So 99% of the market at the moment are breaking laws. And when regulation comes in, we are going to see a lot of these token values turn to zero. And we are also going to see the people that are behind these ICOs potentially get locked up. Now, what a utility coin is, it's a completely different concept. A utility coin is an app coin. It's a user token. It provides you access to a product or a service. Now, it's not originally created for investment purpose. So something, of course, like how Bitcoin was originally created, it was just designated to the community. Bitcoin's token economics are absolutely perfect. The original vision incentivized every single person within the ecosystem to make sure that they're maintaining the network, and it also incentivizes these people to use the networks. And again, touching back to the 1 megabyte block size limit, the 1 megabyte block size limit completely destroys the token economics built within Bitcoin. It doesn't mean that a utility coin cannot increase in value. Of course, it will increase in value with usage. The more useful the token is, the more valuable the token will be. How we get mainstream adoption? We have to lock down the base protocol. And we originally saw this with BCH when it forked off of Bitcoin. And now that space did have some distortions. Those distortions have now been completely removed. And we have the chain created called BSV, which allows for rapid on-chain scaling. And that is the methodology behind it. Not just that, it is locking down the base protocol. These developers within this space, they have a habit of over-developing. Now, if you're making tweaks and changes to the base layer 1 protocol, it echoes through everything else. So if I make a slight change, guess what? If I've built on top of that, all the money that I've invested into the research and development of what it is that I'm creating may now be completely useless, and I may now need to start from stage 1. Locking down the base protocol is massively important for mainstream adoption. BSV plans to do only on-chain scaling, and their next 2-year targets is 2 to 4 million transactions per second at peak and 500K transactions per second sustained. Now, we need to give a lot of headroom as well, because just like in December, of course, everyone is doing a lot of transactions in general because, of course, people want to buy Christmas presents. We need the headroom so that when the market is thriving in the most profitable times for companies to be around, that they're not having issues like the network jarring or like fees getting extortionately high, so people just don't want to do transactions and usage drops. There needs to be a huge headroom so that when we do have these peaks of interest, guess what? We can handle the weight, the support beams can handle the weight, and people and companies within this space can thrive and prosper. Also, building on top of one chain, allowing sight. The issue with the current banking system is that it's built up of multiple ledgers. If I want to check my bank account on Barclays, for example, I'll be able to see my own internal ledger. I'll be able to see all the transactions that I've actually done, but I won't be able to see other people's transactions. Then you go to the stage higher. It's the people that are in control of Barclays. They'll be able to see their whole public ledger. They'll be able to see all the individuals that are current clients of Barclays and all the transactions that have been done. You go one stage higher is the clearinghouses. The clearinghouses will be able to see a string of banks' ledgers. Just keeps on going, very much structured like a pyramid. The higher up you are, the more you can actually see. The issue is, because at the moment in the financial system, we're effectively at the bottom, a general user, so I can only see my account. I cannot see what the people at the top are actually doing. I cannot tell whether they are a negative polarity or whether they are a positive polarity. I cannot see whether their transactions that they're doing are for a negative reason or for a positive reason. This is exactly what the power of the blockchain is that it holds every single individual accountable, no matter what your stature is, no matter what your position is, no matter what your wealth is. It holds every single individual accountable. It doesn't matter whether your transaction was done 10 years ago or whether it was done 2 minutes ago. The record is there that everyone can see. This is what the true value of Bitcoin is. we can hold those people accountable, and we can identify whether their transaction was of a negative polarity or whether it was a positive polarity. So with us learning all of this information, there's been something that, of course, we have been building for the past year at least. We are building currently a Bitcoin banking ecosystem. And if there are any of our clients in this webinar as well, they'll know, especially if they've been talking to me, that we've been talking about it for a long time now. Of course, there have been some hurdles, but we are very happy with where we are at the moment. And it will allow individuals to actually have an experience of a normal bank account. So nothing techie, nothing geeky. They'll be able to do transactions on a common level where my parents will be able to do it. My parents will be able to do it. It doesn't matter whether you have a technical mind, anyone will be able to use this. So what I'd like to show you guys next is a short video of what it is that we've been building over the past year. And hopefully it plays clearly.
Without it, you can either stand or sit. Yet it cannot be seen. It is everything, yet nothing. Introducing Gravity. Easily move your money between different pairs or into and out of cryptocurrency as you wish, without the need to buy or sell orders. From the dashboard, select an account. Here we see an overview of the total GBP balance and all assets held. Swipe the balance to move to a different account. Select an asset. Click for detailed balances. Activate Switch. Use the drop-downs to select which crypto you'd like to switch to and for what amount. Click on Switch and you're done. Your new balance is reflected in your account. Introducing Loans. No need to sell your crypto if you want to access and deploy fiat. Bitstocks Loans allows you to use your cryptocurrency holdings as collateral for a fiat loan, with a predetermined settlement period and interest rate. Choose an asset and select for options. Click on Loan and tailor to your preferences. Use the slider to pick a preferred payback period. Review your loan, accept terms and conditions, and you're good to apply. Within seconds, you have equity released and fiat in your current loan. The Bitstocks platform gives anyone the ability to set up a standing order in just a few clicks. Sending payments to nearby Bitstocks users is as easy as selecting the Find Nearby Friends option, tapping on their photo, inputting the amount you wish to pay and date, and you're done. Grow your crypto wealth by earning incentive payments for users you refer to Bitstocks. Becoming an affiliate has never been easier, with rewards deposited in real time and showing up in your current account just like any other payment. As simple as that. Our dedicated media center embedded within the platform provides an up-to-date stream of all Bitstocks educational and informative content, including our podcasts, videos, vlogs, blog posts, and ebooks. We've created the most user-friendly application whereby anyone and everyone can spend, store, and trade their cryptocurrency in a safe and trusted ecosystem. Pre-register for your interest today.
Now, that should be going live Q2 of next year. So, of course, if you have any questions based around it or want to register interest, the best place for that is actually our website. But now we're going to open up for some questions. So, of course, if you want to ask some questions, just quickly go over to the chat box and fire away, and I'll answer as many as I possibly can. BCH, what we are doing at the moment is we are completely following the technology. The issue of what has been happening is, of course, we originally had Bitcoin. Bitcoin effectively at the start is exactly what BSV is currently with its token economics. Bitcoin is pretty much like a bodybuilder. Michael uses a perfect analogy for this. Bitcoin is what we call a bodybuilder. On the external, looks amazing, But if you look internal, you don't realize that there are clogged arteries. And when the person tilts over, people are surprised. They say, he looked amazing. That's exactly what's going on with Bitcoin at the moment, because they've completely changed the token economics by limiting the 1 megabyte block size. Now, with BCH, it started off in a positive way, because of course some of the individuals that were behind it, but there were some negative actors that also got involved in it. So now we deem BSV to be, of course, the pure version of what Bitcoin originally was. So we believe BSV to be the original vision. Yes, Evan, the best thing to do is Bitstocks TV. It's on YouTube. Just literally type in Bitstocks and you'll be able to see, I believe it's Michael Hudson's presentation. I believe it was our CEO that actually done that particular presentation where he's detailing what the global pyramid of power actually is. And he does it in immense detail as well, in every single fraction of how manipulation does happen. Hi there, Mark. Mark Bell, any moves into building an online community? Yes, that is exactly what Bitstocks TV is actually all about. It's the first steps of us building an online community. So we're just allowing everyone into what it is of what our minds are and what Bitstocks is all really about. And then we're going to start taking extra steps, and it will even go into the degree of just education in general. So we have huge plans to build a huge community, because we want to enable every single individual to not have to go anywhere else. Of course, you will always have the option to do that. You are a free person, you have free will, but we want to allow everyone to be internal within this ecosystem. If it's banking services you need, then that's what you'll get, and so on and so forth. Nathaniel, why are there so many people still focused on BTC? Do you believe BTC value will go down to zero? I do think it will go down to zero. I know that is a big statement, and of course, again, just don't take this as financial advice, but I do believe it will go down to zero unless things do change rapidly at the moment. What a lot of these developers don't understand is if you are making minute tweaks to the economics, guess what? You might be turning your currency from a legal currency to an illegal currency. And if you are trying to create a currency, you better make sure you comply to every law under the sun. And the reason why so many people still focus on BTC is because education still needs to become a major topic within this space. The fact that the price has lowered so much and it's squeezed a lot of the distortion and noise out of the space is a good thing, to be completely honest. So what people will start to understand is not to believe market in power. Just like some of the few key individuals with huge social media accounts, just because they have a lot of followers, it doesn't mean that they're intelligent. It doesn't mean that they're correct. It just means that they've got a lot of followers. So that's why I believe that there are still so many people that are focused around BTC, and a lot of these financial products are being created around BTC because it does have the majority of market cap. But that will change as soon as people start to understand that the technology under Bitcoin is completely different. The tide will start to shift. Let's be able to check and compare that. And Mark Bell, that is a great idea, to be honest with you. And it's something that I can actually probably have a chat with the team on integrating into our new platform. 2019, do you leave bigger? Right, Martin. Great informative webinar. Thank you for that. Are you still positive with Bitcoin in 2019? Do you believe bigger players will come into the market next year? We will need decoupling from BTC. Can you see this happening soon? Now, it depends on what variation of Bitcoin that you're talking about. If you're talking about BSV, I do believe that next year will be very positive. It doesn't have to always mean in the element of price point, but I do believe that, because especially now as a company, we've looked at all the a lot of the cryptocurrencies out there, and for what we're building, our banking ecosystem, the only one that we believe that we can put that weight on top of is BSV. So I do believe within BSV, you'll have a lot of merchants signing up to it and creating proper and real companies on top of it. Not single utilities that just don't get used. You're actually going to have real companies coming in and setting up infrastructure. What pain points will sidechains face when they... Right, that is a good question. What pain points will sidechains face when they finally get with it, go on chain? Right, sidechains. Great discussion. And again, this links into the whole thing of providing site. Lightning Network is a huge topic, and it's what people within BTC believe to be the solution. That is nowhere near the truth. What sidechains are is a lazy way, because your network cannot handle the weight that's being placed on it. So you're just basically using a sidechain and handling some of the weight elsewhere. Now, the whole thing about cryptocurrency is providing sight, the fact that we can see every single transaction that's going on. If you're using a private company, which sidechains tend to be, you're taking away a lot of that sight. And again, those sidechains, if they are handling transactions, there may be exploits. We know that the original code of what Bitcoin was, it has been proven, it has been tested. These sidechains could have various exploits. So it's not something that I personally trust, and I do think it's a lazy way of developing, as opposed to choosing the better option, which tends to be the harder option of actually developing on-chain and increasing the amount of weight that you can handle on-chain. So hopefully that answered your question, Rory. I don't believe so, because of course you have the major ones, which are the Lightning Network. I don't know whether it wouldn't make sense for, of course, them to try and adapt their technology to integrate in properly. But I don't believe in sidechains whatsoever. I think private chains could use that, because I believe that there will only be one open source project, and that one open source project will be BSV. I do think there will be some privatized chains, like for the healthcare system, where of course you can store your medical records, and all of the hospitals, they'll be able to access that. And whether they use sidechains or however they store their information, I'm not too sure. But I think that is one area that sidechains can be used. But then again, same question comes to be asked, is what's the point when you have Bitcoin or BSV? All right, let's see if there are any others. All right, I'll answer one more. If there are hi there, Seb, by the way, and thank you for the positive comment, of course. And with BTC, again, and even if countries are accepting BTC at the moment, my personal beliefs is I don't think it will be around. So if there are countries that do eventually start properly accepting crypto. Again, I'm not being a preacher here, but I think BSV will be the choice. And again, it's not just them accepting these payments, because of course one element of it is the fact that it's a currency, but it's also a technology at the exact same time. Perfect analogy of that is my mobile phone. And this is something an analogy I've been using for a long time now. Mobile phone, killer application on this mobile phone is of course to make phone calls. But to say that this phone only makes phone calls is completely missing the point. I can do everything on it. I now basically have a computer in my pocket. I can do my banking, I could do my social media, I can write notes, I can work on projects, I can do everything from this mobile phone. So it's the difference of it being worth £10 to just have one single utility to actually paying £600 and being able to cater to everything. So I do believe that eventually countries will start using cryptocurrencies and BSV, but what I hope will happen is that countries will actually start building on top of BSV as a technology. But yeah, what we'll do is we'll end it there. So of course, I hope you guys enjoyed the presentation. And if you do have any more questions, of course, reach out to us, and you can just go to, of course, our website where you'll be able to see all the information and contact numbers as well. And yeah, Mark, give me a call in about an hour or so, and we'll have a bit of a catch up. But really enjoyed this. We're going to be doing them a lot more now. So there'll be one webinar every single month. We're going to be doing a lot more events as well. And to get updates in general, the best place to go is Bitstocks TV. Of course, you have the analyst boys that are coming out with content constantly from their podcasts. A lot of good ideas are being thrown around, and it will just give you a much deeper understanding into what this space is all about, because there are a lot of distortions out there. And again, social media profiles, the fact that some people might have millions of followers, it doesn't mean they're correct on the statements that they're making. So this, all the conversations that we have and all the statements that we do make, we do ask people to challenge them, because we'll always be willing to go back on what we said if you can present your argument in such a way that it debunks on what I'm saying. So again, absolute pleasure. I hope you guys have an amazing day and a better Christmas and New Year's. So peace and love.